good day to you, anyone, anywhere you are in the whole world. As you are watching me right now, thank God for the gift of life. We are in the new year, and I pray that this new year will be a great year and a glorious year for us. It shall be a wonderful year for us in the forex business industry, and I believe that as we go further in this new year, there is still time for us to get so many things right, so that before the middle of this year, towards the end, we shall have songs of praises to sing. We shall have wonderful testimonies to share. So it all calls for our determination. Even though right now things may not be exactly as we want it, but at least we are on our own. God is feeding us, and we are doing well. Nobody's pushing us around. 9 to 5 jobs is not our best, but this business has been what God is using to sustain us. So we are doing well, and we believe that furthermore we are trusting God for higher ground, and we get there this year. For those of you that are thinking of giving up, I want to beg you, please don't give up. There is hope. There is hope for you. All that is needed from your side is just your determination, and then the hard work, be hardworking. Make sure that you work hard and pray also. For there are so many things on earth that we may not understand, but they need divine inputs in order to work right. So now, last year the last topic that we had was perfect entry and tight stop loss. So we had it on the in the class, but I said then, if you can remember, that we are going to have another one which is going to be part 2, but this time around we are not going to stay in the class right now. We will be going to the market directly, on the charts, to see how this thing can be applied real time, so that you will know that this is not just head knowledge, but things that are coming through the experience. And then I don't have to boast for you, or I don't have to start raising myself beyond what is normal. But I know that if you are really serious about this business, and you are really thinking that one day you won't be able to run scatter again, and to just sit down, once you have money in your account and that knowledge is there for you, you have nothing to worry about your later years in life. So what we need now is pure seriousness, determination, and hard working and prayers. So everything will fall in place as we go further. Because the more you do things, the more you get familiar to it, and the more you get familiar to it, the more you get to understand it. The more you get to understand it, the more you become master over it. So let's go to the market to see how these things are applied in the right time. So let's go there. Meet me there. Yeah, you are welcome to the market, and like I said, we are still on topic perfect entry and tight stop loss. So actually, once you are able to get the perfect entry, you should have no problem with tight stop loss, because once you have gotten it right, no matter where you put your stop loss, there won't be any problem. You have nothing to worry about. But then we are going to look at all the points that we highlighted in the first part of this video, the areas where we need to find our perfect entry, because those are the ways. And the perfect entry is a skill that every trader must learn. In fact, right from the time you started learning about forex, that should be one of those major things that you need to place more of your attention upon, because sometimes you may get the trend right, just like I used to say, but yet if you enter wrongly, you still see that you lose your money. But now, if you are able to come across this lesson and learn and take your time to learn and to understand this, it will help you on how to enter the market rightly. So when you enter the market rightly, it will give you so many benefits. Number one, tight stop loss, just like we said. That means you have minimal risk. Even if at all the market being a live market that it is, anything can happen. Once it is a live market, we have series of forex traders in the market. We have them in form of buyers and sellers. So, and everyone with his own motives, everyone with his own reason, one reason or the other for trading. So, and then we have different type of traders. So as long as we have different type of traders in the market, you cannot even be in control. So you are not in control. Everything you see on the chart like this, they are just the graphical representation of the activities of both the sellers and the buyers in the market. So now, for you to get the market entries right, you are going to consider several factors. So we have like about 4 or 5 factors that we are going to treat in this video. There are so many factors. We have different kind of traders, we have different kind of trading systems, we have different kind of experiences. People with deeper experiences, people with intermediate experience, people that just come into the market. But market entry is what you should learn. After what forex trading is, the next thing, because the next thing they used to tell us then was to open demo trading demo account and begin to practice trading. So right from then, you need to pick up on market entry. But then if you don't have good teacher or good mentor, there's no way you can know all these things, talk less of mastering it. But now you are hearing it. If you are hearing for the first time, pay attention. If you have known it but you are still struggling with it, pay attention. You still have 1 or 2 things to learn. Nice to tell you, no man is an island of knowledge. We are all here learning. I too am also learning. Sometimes when I teach you some things, I will have some revelations and I just quickly keep it and add this to my experience, so that next time I will know what to do next. When the experience is when the market does this, then I should do this. If market does that, I should do this. But if you do have experience, when the market act in a particular way, you won't know what next to do. You become confused. That is what we call the advantage of experience in the market. So experience comes when we are learning every day, learning every day in, day out. You accumulate experiences. Experience is not what you can fast track, because it comes along with long time of practicing, years of practicing, like that. But you can fast track your education, you can fast track every other thing, but experience you cannot fast track it unless you go through the factor of time. And with that, you accumulate a lot of things. And if you are somebody who's quick to learn, there are so many people, so many traders, they are so stubborn. They find it difficult to reconfigure their mentality, especially those who had some people don't even have basic knowledge of forex trading. They just go into the market and learn 1 or 2 things. They don't even learn. They just see trying to gather small experience, small training here and there on the internet from somebody, whatever this one says. They didn't go directly for basic training that will make them know a lot of things about what forex market is. But then let's continue. The first one that we are going to consider is support and resistance level. And you can see this chart now. we have support, we have resistance. So now we are going to use this one because this one actually gives us exactly what we want. Then before I move further, I want to say something. If you are here on your chart and you looking for trading, well, depends on your trading system. We have different kind of trading systems, but then if you get to the market, I used to tell you trading system is a set of rules that have gathered together to form a systematic approach to the market. So when you follow it, we have different kind of market conditions that you are looking for, the kind of market structure, the kind of chart structure, and so many things like that. Even we have to look at the candles and so many other things. So it now depends on your trading system, what your trading system have as trading rules that you need to follow. So if these rules are not there, I want to tell you that don't try to go ahead just to enter into the market at all cost. You don't trade when there is no signal. Don't try to enforce a trade. Don't try to force a signal. Don't try to it look like it. It may look like it. If it is not it, it is not it. Forex market does not deceive you. I always tell you, always wait for the market to tell you what to do. So, and part of it is by following through the rules of your trading systems. So if you have your trading system has about 4 or 5 conditions to be observed and met before you can ever consider entering into the market, make sure that those 5 conditions are complete and they are okay. So when they are complete and you are sure that they are really complete and they are there, then you can now begin to consider how to enter. And I told you a good trading system will give you entry points, how to enter and all that. But then perfect entry on its own is a skill that you must develop. You must take time to practice it on and off and on and off until you are able to grab it, until you are able to execute entry at any point in time. Even if they wake you up from your sleep, you know where to go, how to enter, what to look out for. So now we are going to consider the first one, support and resistance level. As you can see now, the first thing here on this chart is that we are going to identify the trend by the help of this one now. Okay, look at this. You don't need a prophet to tell you that this market is on upward movement. So meaning that if you want to look for any trade at all, it must be buy trade. So now when you look at this one now, what is this one saying to us? Wait, I'm coming. Hey, this one is look at this one now, and then let's consider this place also. We can get that one through the head of support and resistance level. We have the highest resistance level that we have is here. Then the one that follows it here is here, and another one here. So we can connect this one to this one to form that, to say that the last time the market went higher was this place, and then after then the market had not been able to break through these levels. So that is why we have resistance level here. So also support level here. You can see this is support, one of the support levels. This is another one. This is another one. Then we had a break here. Now I'm still going to tell you the reason why we have a break here. But then when you look at this place, this one is a resistance level. Down here we have support level. But then when you look at this place, there was a break, and then the market came back to turn this place to support level, and then created another resistance level. Then later it went ahead to create another resistance level, then to create another support level. That is how it was going. So this place now we call it flip area. That is where the resistance level turns to support level. This is a flip area. So now that you see that it formed this place, then we had a retouch here. That is what we call a retouch or a retest. The market, the price broke through, came back for a retest or a retouch, and then moved upward, create another support here, moved upward, and just like that. But then after then it started forming what we can call consolidating market. You can see now that the market is neither moving up or down, it's just moving zigzag, within a channel. So this is a channel, and you can see. So now let's try to identify it right now. So for anyone, you know that this one is just a consolidating market. So if you buy here, you definitely lose. If you sell here, you will definitely lose. So all you need to do is just wait and let the market do take the next step, so that you can know what to do next, also even as a trader. So we have upward movement here, which is upward trend, but then we have sideways, which is consolidating market. So now for us, when we are talking about, here now we don't talk about perfect entry, because there should be no trade in this area. This is an area where the market is consolidating, and we are waiting for a breakout. So now let's talk about this one, this upward. Now let's say we start here. The reason why I used to advocate for tight stop loss is because I told you, forex is a live market. Anything can happen at any time. If you look at this place now, the market was coming down from this place. So when you look at the formation, the market structure here, okay, let me start this way. We had a downward trend here, then there was a brief stop, which is a retracement, went back, then which is normal structure for any good market. You can see now, then retracement, then retracement was over, and we had a way down also. You can see the way it was moving. So for now, for anyone at all, this actually gives you good areas to enter if you really want to trade this particular trend that came down like this. Now, how do we enter? It is very simple. One thing is that we need a lot of patience to study the market. Even if you don't have, if you see something like this, and then let's assume that by the time the market here and was going back up here, and you got to the market when the price is around this place, you should know by the formation, by this previous formation, that we are having that we are having retracement here, then it's coming down, retracement here, and then you see so now let's assume you got here when the market, so all you need to do is to wait, because you know that the market is obviously going on the retracement back up. So all you need to do is to wait for the retracement to be over. So when it's going to be over, you can't see, and as I told you, this is a live market, anything can happen. So So it may not even be an issue of retracement anymore. It may be a total reversal. So that is why you must be patient. Patience is a virtue that every trader must imbibe in his life, so that will help you to always make good decision in the market. So by the time you see that the market now formed another resistance level here, and then the market was coming up, and then you see this big candle, this engulfing candle. Now it actually engulfed this one, so meaning that the sellers had already came back to take total control over this market. So all you need to do is you can enter around this place, or you can allow this candle to close and then enter here around this place. So this is what we call perfect entry. So if you enter around this place, then you can put your stop loss around this place, just a few pips behind the current support, resistance level. So you can see now. So now, but one thing is that now you don't know how far the market will go. So that is why you don't look for 1 million pips at a go. Just let be something that is realistic. The minimum should be 40-50 pips. 40-50 pips. This one now, let's look at. This is 30 pips anyway, but then there's a way out. Now if you enter this place now, and then by the time the market move, at least didn't move against you, since the market left this place, it has never gone back to that level. So let's assume, we know now this is your stop loss level. Not until the market went back up to this place, that was when the market came back to this level. So all of this time you are safe. Even when it went back, he didn't get to this place, then he came back and came back down here before the market moved back upward. Now what we are saying is that for you now to be on the safer side, if you are somebody who used to observe the rules strictly, it will help you a lot. But if you are somebody who will just enter the market and then leave and go your own way, you will discover that you met with a unpleasant surprise by seeing the market coming back here. This is today, one day, this is another day. So for you to abandon your trading until this day, it doesn't make sense. Forex trading is a business, and it is your business. If you put $1 million in your account and you didn't touch it, you didn't trade with it, nobody will use it to trade for you. Your money will be there, except you have a special arrangement with the brokers concerning their services. But now you don't abandon your business. Now that you have entered, fine, the thing was moving for you, but then once you add a fair distance, just like from this place now, the market had moved down to this level now, around this level. There is nothing stopping you from moving your stop loss from here. At least this is your entry point. So you move your stop loss around this place. So meaning that you now entered into break even. Now that you have broken even, anything that happens in the market, you will not lose your money. You will not lose your money. So that's a safe way to trade. Now we are talking about perfect entry now. So all those ones are just by the way. Now we are talking about perfect entry. You can see now that as you entered, nothing your stop loss was not under threat. So now let's look at another place. Now this one has gone. Let's assume that it has already hit your break even level and it's just moving like this and went down, back up, down, and then you know that this market, you are looking at it, maybe it's going to be just ordinary retracement, but you see that the next resistance level is almost at the same time with the same level with the last resistance level. So you should know that something is fishy. Something is fishy. It's supposed to be, look at this one now. This one is higher than this one. This one is higher than this one, meaning that we are coming downward higher than this one. But now you are now see that the thing is just trying to go back to to match up with other resistance levels. Then you should know that something is fishy. So you have to be to be patient and wait for what the market will do next. Yes, you can mark it has come to this place, but then you will see that at the end of the day the market peaked and then begin to go back upward. So let's now work with this upward movement now. So you have to pick out the market structure here for you to be able to enter. Let's assume that when you got to the market is around this place, and you can see this engulfing candle, which shows that the market is like the buyers have taken over. And then this another one, and in fact we have series of engulfing candles. This one is an engulfing candle, this one is another engulfing candle, then later when they move upward a little bit we add another engulfing candle, meaning that the buyers are on the prowl. And then look at this one now, also on the, look at another engulfing candle. So if you study a lot about candle, nobody should tell you that it's like you have to look for buy markets here. So let's assume that you look at it, this is your resistance level, and then we add another resistance level here, although the support level remain the same here until we are creating, the market is creating higher and higher resistance levels. But here around this place we add a break. So immediately we add a break. Remember what I told you somehow in one of my videos. You can go and watch them and you will get what I'm saying. So you don't wait for markets to come back and do retouch, as this one didn't do something like that. So this is resistance level. So immediately it breaks, all you need to do is enter in this around this place. Enter around this place. Then anywhere you should feel free to put your stop loss. Even if you put it here, it won't be under any form of trade, and you can see. Although somebody may argue that it may be too much, that's too far. Okay, let's look at it. This is 44 pips. So if you are looking for 50 pips as your TP, so even if you have 44, that's something like ratio 1-to-1 thereabout. But then after the market had moved very well, you can always move your stop loss to a break even here, and then because the market was still moving up and up. So here now, if you decide that I want to enter, you look at this place, you wait, because you have already seen that after the market got to the resistance level here, it came back and then formed another, after this support level, formed another support level, then starts going back upward again to continue the trend. So you can actually enter at this area. So even if you put your stop loss a few pips below this area, it's still not under trade. So, and then this one should give you confidence, because you know that really we were on. So if you enter now and then the market moved upward, you can always move you can always move your you can always move your stop loss above the, just to break even. So by the time it breaks even, your trading is safe. So these are the ways to enter. So by the time this one starts its own consolidation, whatever you wait, because obviously it is going to cut you off around this place, around this level. This is where your break even is worse, so it will surely cut you off around this place. But then you had nothing to lose. If you are trading like this, I tell you that you will not always lose your money, but it all depends on your experience and then your ability to adapt yourself to the current market condition, and then the ability to learn faster and to acclimatize. I use that word, that is to show you that you can always adapt, blend yourself to current situation and flow with the market. Now that I said I want to tell you the reason why we had a breakthrough here. Let me move. We have first touch here, another touch here, didn't break, could not break this level, so the third time there is always tendency for the market to break, because it was gathering strength here and the thing is bottling up here. So although we know that it's either it breaks up or down, but now that it's breaking down, now it's actually giving us, look at this engulfing candle now, showing us this long candle, showing us that we might likely have to go down for a long time. Now I look at it, this place now, we can call it liquidity, void liquidity. So it has to be refilled, because when you buy, for you now to take your profit, you have to sell back. So this liquidity needs to be filled. Liquidity for it needs to be filled. So but if we are looking for sell now, it's not bad. Although the pips may not be much, but at least you get, like, let's say currently we enter from this place now, and then this is the last support area, the current support area. So we look at it, you can look at it and say, okay, for us to have a realistic distance, so from here now to this place, we had about 44, almost 50, there about 50 will be around this place. So this one, once you are able to, the market are able to move downward for you, remove your stop loss to break even, and then you leave the rest to the market, put your your TP around this place. So that about support and resistance level, the way to enter. So this one, usually always when you study this thing and you practice and they have become part of your lifestyle, your trading style, you will discover that now you will no more experience such all of those losses again. Instead of losses, it will always be break even. So now that is that. Then we are going to move to the next one, which is a moving average. So now moving average, look at this one now. Now we have this one as a clear upward trend, but then all of a sudden the thing started coming down gradually, and then begin to form market structure. But then got to a time that this market structure is becoming unreliable. So all these things, you must always pay attention to it. So from this place now, you can see what happened. Although it still formed, this is retracement, the thing went back as if it want to continue, but from this place the thing went back upward, and then before you know it, then we begin to have what we call slanting channel. You know, it's not going up, it's not going down, it's just, so look at it now. Then from this place started something like that. So all you need to do is to be patient with this kind of thing. If at all you must trade this one, then go and sleep first. Don't just bother about this market again, because the sim has gone out of this. So the market is now on its own, consolidating. So you don't have to bother yourself about it, except you are waiting for a breakout, which you can't really tell where it is going to. Maybe it will continue upward, or it will break down to do the liquidity void we are talking about, because those who bought here now, they might likely want to sell back, and then it has to be. So now let's talk about, now that we have determined this particular trend, let's assume that we want to trade this trend now. So now we need moving average for our trading. But then I want to tell you, because I've been telling you before, that moving averages, they are of different values. So depends on the one that you use, that and it works for you. You know, some people they use smaller one like 5, 8, 12, 10 and so on. Some people use 20, some 30, some 50, some 100, some 200, some combination of 2 or 3 of all these, just to make sure that they are able to make good trading decision in the market rightly. So whichever one you try, I told you that always try whatever you see, always try it with your demo account. So if it works for you, then try it with your real account with sense. That is, use the smallest or the minimum loss size to test it. If it works for you, then you can build your confidence with it and begin to use it. So now we are going to use, let's use MA20 first. So when we use MA20, we might likely use another one, but I want to tell you, it doesn't matter what MA, moving average, you use. Just pay a particular attention to it. That we are using exponential now. Exponential. Hey, look at this now. Very good. Now from here now, we discover that immediately the price move above this MA, we are talking about buying. If the price move below it, we are looking for sell. So now that the market already moved around this place, across this place, now you can see that as it is moving, it actually creates something like, you know, this is retracement, as if it's coming to touch this place. So and then you use this MA as buffer point. You know, look at this now. It's either slashes through it or touch it and rebounds. So now once we have price rejection here now, you can see. So all of these things give us perfect area to have our entry. Perfect area to have our entry. Now if you want to enter here now, you can see that the market was going on. Let's assume you enter. This place now, when you look at it, this will see where we have a kind of resistance level. The price broke through it, came back again, and then is unable to break through. But now here is another breakthrough. So now let's assume that you entered in this place. This is a very good place to enter. Another good place to enter now, since you know that the market had already, you know, observed a little retracement, and then it's going back upward, this is a good place to enter. Here's another one. When they move upward, touch this place, we slashes through this place and then form a kind of this rejection candle. This is a rejection candle, and you can see. So this is a rejection candle, which shows that the market is going back upward after a brief retracement. And then for you to enter now, you can enter around this place. So let's continue. This place also. Then we had a engulfing candle here, which shows that we are going back upward after this brief retracement. So these are the areas where you can have your perfect entry. Do you know that some people, if they don't have this kind of knowledge, they will always lose their money because they will always enter wrongly. Around this place now, somebody will enter, buy, and then put his stop loss around this place, and the market will come back, cut him out of the market, and then continue. So those are the things that we need to observe and watch, so that you don't begin to lack in the midst of plenty. This one now, if somebody enter this from this place, just like I showed it to you, the market had moved like 227 pips, and you can see. So even if you are looking for 100 pips, you already had it here now. So now that's about so it uses the MA as a buffer point where the market rests and bounce up. Just like when we had the same thing with this support and resistance level. So it's using this one now as a support level, and that is what whenever it comes down to it, move back all day, come back to it, move back all day, come back to it, move back, just like that. So you can use any MA at all. Any MA depends on the one that works for you. So we have MA people, I told you are using 30, 50, 100, 200. This one now is 20. So and then it also depends on the kind of time frame that you have. Some people, if they are on the larger time frame, some people can use 100, 200 and upward 50, 100, 200 because of the kind of, if they are on the higher time frame. But if they are this one now is 1 hour time frame, so using 30, 20, 30, 50 is still okay. At least you will know and you see what you are doing. It will give you clear picture of what you are doing and you'll be able to get it right. So the next one you are going to for now is channel lines. All these things that I've been doing is also a channel. When you know how to plot your channel lines to discover what is happening in the market, so that you don't enter wrongly. Now look at this one now. So just like the support and resistance, just like MA moving averages, so also the same way like this. Look at this now. It moved a little bit here after this retracement. Of course, somebody will even think this is just ordinary retracement because the market is on the downward trend here. So somebody would think maybe the upward movement was over around this place. So these are the lines that you plot. So this one now came back and touched this trend line, and then from there pick up again, come in contact with this one, and then retraced a little bit. Let's use this place. Move up again, another retracement with touch this one, then move back upward a little bit, and then another touch up, a brief retracement here, and then move up for a touch here. Now came back, another touch here, then move a little bit upward before it now started this own the consolidation around this place, and then the thing move a little bit upward. That is, the consolidation got bigger. You can see up to this place. Then it move a little bit upward again before it now starts coming down here again. So now in this place you want to enter. Now let me say that you are not even sure whether the market is still going down or up, but at least around this place. Okay. When you begin to see all this big candle, you should know that it's like it is over for the downward trend. So around this place will give you something to think about. So let's now assume that you entered from this place. You entered from this place, and you put your stop loss around this place. That is a few pips below the, because if you are plotting it now, this must be a resistance level and a support level. Let me mark it for you. So now you can see that the price did not come back to this place, and this is your stop loss. So even if it is going to come back, by the time the market had moved, you can always move your stop loss above the entry point here, and then the price begin to move up and down. So if you are picking like maybe 50 or what, let's see what we have here. That's about around 49 pips up to this level. More than that, to around 32 pips up to this level, before we now begin to see the brief consolidation, and then got bigger before it began to move, and then downward and then the market becomes unreliable. So all these things we should put our mind. We are talking about perfect entry now. So when you mark it out like this, it helps you to be able to locate where you need to enter. Immediately there is the retracement is over. Now this one now, the retracement was over because we had the, if you look at it very well, we had a rejection candle here, you can see. So immediately there's a rejection candle, you know that the market is going back upward. Well, let's assume that you enter in this place. You enter here, and then just below the rejection candle is either you pick this place or some points behind the trend line that we are using. So whichever way, the price did not come back to that level. So immediately the price moved, though it came back here just a little bit below the entry point here, but then after that it went back up then the market never get to the area of entry point anymore. So by the time it moves on, you can always move your stop loss around this place. Although it may cut you off here, but you still have another chance to enter here, since you know how to enter perfectly, and then you have nothing to worry about, because after it moves up, you can always put your stop loss around this place. So these are the ways that you use to get perfect entry and tight stop loss, and then it will reduce the way you are losing your money. If you master this one, immediately your trading system gives you signal, and you know that what is next is to enter the market. Just try to observe all these things. If you don't get it right with MA, you get it right with support and resistance. You can always also get it with channel lines also. Then let's consider the Fibonacci retracement also. Fibonacci retracement. Let's look at the one that will give us so we are looking for something. If you don't see it, don't rush into the market. Some people have a problem in the area of having emotional attachment to a particular pair. So if they get to that pair and this pair did not even give them the correct trading, the rules of their trading system, they still want to trade. If they even give them correct market structure by which they can study to know where to enter, and know surely that this market will move either up or down, they will still want to trade at all cost. Don't be like that. You will always lose your money. So don't develop a kind of emotional attachment to a particular pair. Anyone that gives you correct what you are looking for is what you should trade. So it doesn't matter whatever trading currency pair it is, as long as it gives you what you want, trade it and make your money and leave. You should not be attached to a particular. I'm not saying it is bad. To at least you will be able to monitor the movement, know everything about it, the characters and everything. But then when you have developed a particular emotional attachment to a point that you just want to trade it, whether there is an indication to trade or not, you just want to trade. That's the problem, and so many people are losing their money. So if you check a particular currency pair and it's not giving you what you want, move ahead. There are lots and lots of them. So this one now is not giving us clear, although we know that the market is gradually moving downward, but it's not giving us clear. This one now is not. When we are looking for downward trend, we are looking for something like this, not like this. This one is just gradually. No, so it doesn't make sense at all to say you want to trade this one just because it looks as if the channel is moving downward. This is must have a very good, the one with a very good slanting position, just like this 45 degree and not more than that. So now let's continue to look for what we are looking for. Once you don't see what you are looking for in a particular currency pair, move to another one. Continue to search until you are able to see the one that is giving you what you want. And if you didn't see any, then that means there is no trade for that day. Forget about it. You don't have to. Not trading is part of trading, because your money will be safe. Your money will be there. Nothing will touch it. Nothing will touch it. at this one. We are talking about the Fibonacci retracement. This is upward movement. Okay, I think this one. So let's look at this one now. So this is it. Now the market came back, and then we plot. This is the we had a kind of upward movement here. Up and down is moving up gradually. Know that. So then when it came back and was going down, we plotted our distance to see that if it's going to work with Fibonacci retracement or if it is a total reversal. But now you can see, now that we have plotted it, we know we have 4 points where when the market slashed through it, the area at point at which we think the market will turn back, just like we have 23.5 here. If the market didn't turn back here, then we are looking at the next one, which is 38. If the market didn't turn back here, we are looking at 50 here. If the market didn't turn back, we are looking at 68. And look at what happened. We had a rejected candle. We are very clear, and we have large candles that follows. So you don't need a prophet to tell you that you should just enter around this place and then put your stop loss here. So at the time the market moves back up, and one thing that is very sure, if it works like this, is that this particular area is very sure that the market will get to it. If the market turns back from any of this point to the last one, the peak of the previous direction, the market will surely get to it. That is why some people are using Fibonacci extension, because they believe that, look at this one now, we had a rejected candle, and this thing is just rejecting area. This area is rejecting candle, is moving up. And move on. The next point, when you use Fibonacci extension, are the ways to look at those points. But now we are talking about entry. So look at this one now. Give us perfect entry. And then when we enter, by the time the market has moved upward, don't forget, always make it part of your trade, so that instead of losing, you always have a break even. So look at it now, and then you leave it. You put your this one now. You put your TP around this place, and we have we entered this place. This is 78 pips. This one actually determined our entry, our exit, stop loss, and our TP. It will always determine that. So you know that once the markets were rejected, the price is rejected at any of these levels, it will surely get to the peak where it came from. So you can see what happened now. So this is how Fibonacci retracement works, although it looks so easy because this is hindsight now. This is what had happened. But then if you continue to practice with it, you discover that you will get it right. All you need to do is look for a movement in a particular direction, whether upward trend or downward trend. So when you see the market retracing back, instead of overlooking it and say, hey, after all, it's not going upward anymore, let me just leave it and go. No, consider if it's going to obey the law of Fibonacci. So plot your Fibonacci and wait for the markets to give you direction. So you can see this one now. I believe somebody placed this one under his watch and began to see. Although the market was moving back, you may think this is a retracement, brief retracement here, but along the line it came back very strong here. came back, and then you wait. You know that it has slashed to this place. You are looking at this one. Later, it went through this place also through this place, and then when it got to this place, slashed through it, and then the price was rejected. So when you are on the watch, you will not be caught unaware as to what to do next. So make it an habit. Practice, and practice. This is a new year, 2024. You must reap or everything you have sown in the market. You must reap it. Everything you have lost to the market, you must recover it. So make it your determination to work in you are working in this part. You must make sure that you get the good after this, because the more you do it, the more you practice, the more you get to understand it. The more you understand it, the more it becomes part of you. Your spirit man will be inclined to it. Market is between the mind. Forex trading is between the mind and the market. So sometimes you look at, without even doing any analysis, when you look at the market, you know in your heart that this market is going to sell or this market is going to buy. So there's a lot of guide in the market. So these are what we are doing right now. This one now, when you see something like that went up and then looked as if there is a total reversal, don't mind yourself. Try and plot Fibonacci and watch the market. If it obeys the rule of Fibonacci, then you follow it. But if it didn't come back and continue, that means it is a total reversal. Even if you look at this place now, you say, okay, let's see this place. It has broken this place, and then we had the price rejection here, and you entered around this place. Sell. Bearing in mind that you have plotted your Fibonacci here. So anytime from this place is May. So you may use any of these points as your TP, and then you'll be on the lookout. So your stop loss will be here, a few pips above the rejected candle or the trend line that you plotted here. So by the time the market had moved clearly from your entry point, then you move your distance to you move your stop loss to break even. So don't forget, you are looking at the price. May come back, it may turn back here, it may turn back here, it may turn. So any of this will be your TP. So immediately this one goes back again, you had already exit the market with this little profit, and then you move back up and you pick this another trade again, and then you capitalize on this. So if somebody who can achieve this will be somebody who is very patient, watching the market, keep everything under watch, and begin to study the market and know what he or she is doing. This is your market. This is your business. So this year, make sure that you mind your business. And then when I say don't trade with your money, so any profit you make on top of your money, use that profit as a risk to trade the next trade. Don't let your risk enter deeper into your money. So any profit you make on top of your money, use it as your risk. Do you understand me now? So then take risk once and not all the time. The ones you take risk is when you have your money, you just funded your account and you take risk. And then the risk you are going to take, don't let it deeper into your money. Let's assume you have $1,000 in your account, just funded your account, and when you look at it, you should not risk more than 50 pips. $50 out of your out of your $1,000 dollars. And so when you risk $50, that is the risk. So anything below that is way too much, because if you are losing $100 over $8,000, it remaining 100, meaning that if you lose 10 times, your money is over. So always take risks once and not all the time. So when you take that risk with that $50 and immediately you have a profit, always make sure that your risk stay within that profit, not into enter into your $1,000, which is your initial balance. Do you understand me now? So then don't trade prediction. Don't predict the market. Market is a live market, real market. So don't predict it. Trade the reality of the market. watch the market, be patient, see everything that is happening, and respond to it adequately, and it will pay off. So if you make all these things, your way this year 2024, I want to tell you that before the end of this year, you will be happy that you have improved in your trading career and you are getting the goods out of the market. Then the last one, let the market teach you what to do. You can see this one now. The market was the one that taught us what to do with it. So it's part of not trying to predict market. Don't predict market because you can never get it right. If you have a trading system that is predicting the market, dump it, throw it away. Throw it away. It must tell you the reality of the market and then follow through. So yeah, we are going to put it at we have spent a lot of time. The time has really gone, but at least I believe that we have learned one or two things out of this, and it will help us. If you are serious about your business, and you know that one day will come when you won't be able to run Etasketa again. Your 9-to-5 job will say go and sit down at home when you are about 60 years, or you have served that company or that government work for 35 years of services, and then they ask you to go and sit down at home, go and manage yourself until you die. Then you know that is not your person. You are going out there not to retire but to refire. You have your business that will not take your energy, that will not take just to sit down. Once you have accumulated enough experience in the market, all you need is to have money in your account for a third turnover, and then you begin to make money without running Etasketa, except when you want to do exercise, your body exercise, in order to stay fit. So as you stay fit, stay correct, and stay profitable. See you next time. So before I go, please subscribe to this channel. This will help us to continue, and by this we believe that you actually telling us that you appreciate what we are doing, and then you are encouraging us to continue to do it. When you subscribe, share it, like it, comment, try, just say something constructive, something that will encourage us. So even if you have to correct us, do it, but do it in a constructive manner. We appreciate constructive criticism. It actually helps us to grow. We learn things every day. I told you that no man is an island of knowledge. We learn every day, especially in forex market. We have different kind of trading system, different kind of experience, so many trade. In fact, it is not exhaustible. But then you can always pick your own area that is working for you and match on with it and do well with it. So I pray as we continue in this our trading career, we will succeed by God's grace. See you later. Bye bye. Thank you.